Hi, Gary here. You know, one of the toughest things we have to deal with is when one of our clients calls, or even one of our younger clients calls, and we find out that a spouse has died. Someone 30-something has died. And then the next thing we ask tentatively, did they have insurance? And invariably the answer is no. And they've left a spouse with 2 small children. And if it's a 2-income family, it's pretty bad. And if that spouse who died was the main income earner, it's really bad, to the point that these people could be thrown out on the street. It's just really sad. And it's one of those risk things we don't think much about. Nobody's going to die, especially when you're young. You never think about the mortality stuff. But this is really about risk review. As a firm, we do this every year for all of our clients. I really want to focus on what I'll call the 3 Ps. What are they? You're a person, you, individually, your property, things that you own out there, and then your portfolio. So let's break it down with the risks in these areas. Well, your person, I already mentioned one, is life insurance. That's something that's very important to replace lost income if someone should die. That's primarily what it's there for. Liquidity as well. There's also health insurance. That comes in a couple of varieties, as you all know, medical insurance and also long-term care. And then finally, there's disability insurance, and that's really important, especially professionals working, but also other business people, because of the fact that, again, lost income for long, extended periods of time. The second is really about your property. Now, I know you all know about your car insurance, your auto, your homeowners, and those kinds of things, but we find a lot of times you don't have your umbrella insurance. That umbrella that sits over the top of your car and your home, and if you got renter's insurance, that covers the event that someone sues you relative to something that happens in an accident or otherwise, to make sure it's not taken away. And umbrella is going to cover, $2 million, $3 million, $5 million, or more, depending on how much your net worth is. And then finally, many times if you own real estate, rental real estate or commercial real estate, you segregate that out. Typically in the state of Illinois, we use limited liability corporations for that, and there's other ways to do it. So there's different kinds of property out there. And finally, the last one is portfolio risks. What's the first one? Inflation. Your buying power. Inflation comes every year, and something has to be in your portfolio to offset that inflation, to grow your assets. The second is interest rates. There's a risk. Interest rates move up, as you probably know. It's confusing a lot of people, but the value of bonds goes down. So you got to be aware of that. There's also taxes. And taxes, there's lots of ways to do stuff on a tax-deferred, tax-deductible basis. And I've spoken about this in many past blog posts, but it's important to address taxes. And finally, there's the markets. The stock market, the bond market, the cash markets, the real estate market. And there's various ways to diversify your portfolios to address all of those various risks. Now, hey, just getting out of bed every day, your risk. Thanks. Walking across the street, driving your car. And we all know that. And I could cover many, many other risks, but I just gave you kind of the primary ones in these 3 areas for the person, for your property, and for your portfolio. Now, we have a Facebook page here at Coyle. And if you are into Facebook, you can go to that page. And if you'd like to find out more information on what's going on at Coyle, you can like us, and you'll get, obviously, any of the posts we put up there, like these blog posts, other events that are coming up, articles we think are interesting to you, and maybe once in a while a silly picture or two from what happens around here. So yeah, if you've got Facebook, please take a look at this. Until next time, enjoy.